For more on what Trump's latest tariffs threat could mean for markets and how to navigate them, let's bring in Hamilton Lane co-CEO Erik Hirsch. Erik, great to have you with us.
Melissa, good to be back.
How do you view tariffs when it comes to the impact on companies? Something that you look through or something that you have to factor in?
Well, I think the big question is, are tariffs today actually tariffs or are they negotiating tactics? I think the reason that the stock market is sort of ignoring them generally as across the market, obviously some company-specific exceptions, is that right now I think the market is saying, until proven otherwise, we view these as a negotiating tactic. We don't view these as actually permanent tariffs. If that proves to be wrong, then I think we're going to see a significant market correction as a result of that.
What is significant?
Well, I think you're going to see it by sector, but I think this is going to be a public market where we're going to be sort of operating, kind of driving in the rearview mirror. I think as in past administrations, you've sort of seen announcements or people have thought announcements were coming and the market has reacted in advance. I think with this administration, it's much more likely that you're going to have to sort of see people prove it to me before we actually price all of that in. And so more likely we could see announcements come, market really kind of shaking it off, and then waking up in the future and all of a sudden saying, oh, this is real, this is happening, this is now, and this is more material, and then you start to see market corrections.
You know, back in 2018, we saw some exclusions to Chinese tariffs, Apple in particular with the iPhone. Do you expect to see those sorts of exclusions, especially when you think about some of our largest multinationals, the tech company CEOs have kind of cozied up to the administration, but also some like Tim Cook and Elon Musk have also cozied up to President Xi. So it's kind of an interesting situation. I'm just curious how you kind of fall out on that.
I think we're going to see exceptions. In some cases, just given what the supply chain globally looks like, even if you look at steel, there are sort of aspects of very technically manufactured steel that are only available at a certain suppliers, and those suppliers today are not in the United States. And so that is either there's going to be an exception or there's going to be a real slowdown in certain sectors because of an inability to get certain products. I think you're certainly seeing the administration want to onshore in a significant way, and that's going to happen. But as we all know, that isn't going to happen overnight. And so either we're going to suffer through some product shortfalls, some significant inflation in certain sectors, or we're going to have to see some exceptions and let this sort of build out over time until you can kind of reshore certain manufacturing back here in the U.S.
Erik, it's Tim. So I just try to kind of cut through to, it seems like, and looking at your notes, you say we could have a 2020 moment for markets, and there's a supply chain, at least dynamic, that could lead us to some of those places. Is this really ultimately, again, the fallout of tariffs being poor policy, leading to economic fallout, leading to a growth scare for markets? I'm just trying to really just, connect the dots here.
I think if we sit back here and we say, okay, everything that has been discussed, threatened becomes reality, I think the inflationary impact is significant. I think some supply-demand imbalances are also significant. And so I think you would see a significant market correction. But I think today it seems unlikely based on historical information, the posture of the administration today, the reaction to other countries and other sectors, that it just doesn't seem today that all of these are going to go into full effect as currently advertised. Again, I go back to my earlier statement. This feels more like effective negotiating tactics, but negotiating tactics nonetheless.
You like U.S. manufacturers, Erik, under all scenarios, whether there are tariffs, whether there are no tariffs? Is it simply a reshoring play?
I see that, and I see that both in the public sector and, frankly, the private sector. If you look at what's happening in our industry, the private sector, you're seeing a real focus right now on bringing jobs back, putting significant capital into domestic manufacturing facilities, adjusting domestic supply chain, and thinking about where you are sourcing materials and beginning to alter that. But again, not all of that is possible overnight. It's not possible instantaneously. And so I think this is a short-term pain potential for some longer-term gain. But as an investor, pricing that through, figuring out when you're going to lean in, when you're not, I think is a huge problem. It's one of the big reasons why coming out of the gate, people had said, well, once the election is over, we're going to see a real uptick in M&A volume. And we've actually seen the exact opposite. M&A volume year over year coming down is right now down for the calendar year. And I think because a lot of uncertainty. So we're not seeing this huge, robust IPO market. We're not seeing a lot of M&A activity. And that's because I think people are still in a very much of a wait and see mode.
Erik, great to speak with you. Thanks.
Pleasure. Thank you.
Erik Hirsch.